In this video, I am going to explain almost all about trading in stock market. This video tutorial will help beginners, those who want to do intraday trading or short-term trading in stock market. In this tutorial, I am going to cover investing in equities, trading in equities, futures and options. First, let me explain about some basic terminologies used in share market. A stock, also known as equity, is a security that represents the ownership of fraction of a corporation. Shares are units of equity ownership in a corporation. Stocks are officially traded on a stock exchange are called as listed stocks. In India, NSE and BSE are the stock exchanges. After a company goes public and its shares start trading on a stock exchange, its share price is determined by supply and demand for its shares in the market. For example, in stock market, as on 28 October 2021, 3:30 p.m., the share price of Reliance Industries Limited is 2,598 rupees. The scenario of increasing price movement in a stock price is called as uptrend. The scenario in which the price decreases is called as downtrend. So, we can buy any stock during uptrend. Similarly, we can sell the stock in downtrend. One can buy many stocks simultaneously to create a collection is called as portfolio. For example, if we buy one quantity of Reliance share on 2nd September 2021 for rupees 2300, then later on 24th September 2021, if we sell the share for rupees 2500, we can get a profit of rupees 200 from this trade. Taking a buy entry on a share is called as long position. We can use candle chart for trend identification and predictions. A candle chart is created for a particular time interval that represents the open, close, high and low price levels of the price movement during that time interval. For example, this is one day or daily time period chart. Hence, each candle represents the price movement of one trading day. Now, how to start trading in share market? I will try to explain the entire process of trading in the following 8 major steps. Step 1. Reserve a capital of minimum 10 lakhs. Step 2. Open a trading account. Step 3. Choose an instrument. Step 4. Select stocks. Step 5. Check fundamentals. Step 6. Verify technicals. Step 7. Place order. And the step 8. Wait and take profit. Now, we will discuss each and every step in details one by one. First, reserve a capital of minimum 10 lakhs. Why 10 lakhs? In fact, a capital of 1 lakh to 5 lakh is enough to trade or invest only in equity or mutual funds. However, normally the people tend to try different ways of earning from stock market during the process of learning. If you want to trade in stock futures, the margin requirement to buy or sell one lot of futures is on an average 2.5 lakhs. It is slightly less for index futures. If everything goes well as per our expectation, then it is fine. But when the market goes in opposite direction, we need to take some preventive actions such as averaging or hedging to reduce the loss. For that, additional capital is required. If you want to do averaging, the same amount of margin is required to do averaging. That means we need another 2.5 lakhs. This total 5 lakh is only for placing orders. For holding our positions with loss, we need a backup amount of approximately another 3 lakh. Also, we keep some extra capital of 2 lakhs in the trading account to meet the margin requirements towards the expiry of future contracts. Hence, we need a total of 10 lakhs for trading in futures and options. In fact, for trading in options, we need more than this capital for doing adjustments. The second step is opening a trading account. Nowadays, opening a trading account is easier than opening a bank account. You need a savings bank account, PAN account, and a valid ID proof. There are many share brokers are available and they are providing trading software and mobile applications to do trading through their trading platform. A trading platform is set of facilities related to share trading management, including a demat account. The demat account is a trading account linked to our bank account. Which is the best trading platform? We can choose our share broker based on three parameters: less brokerage charges, simple and efficient interface, trust and transparency. Simplest way is choosing the most popular share broker for retail trading. To name a few: Zerodha, Alice Blue, Angel Broking, etc. Step 3: choosing an instrument. There are many instruments traded in the financial market such as stocks, stock derivatives, and index derivatives called as futures and options, forex, commodities, etc. etc. However, in this presentation we are going to cover only three instruments. Number 1, stocks. It is also called as equity or cash segment. Number 2, derivative futures of both stocks and index. Number 3, derivative options of both stocks and index. So now I will explain the advantages and drawbacks of these instruments. Based on that, you can choose a type of instrument. First, we will take the most simple, convenient and secured instrument, that is equities. It is also called as the stock, which is the security of a company which reflects the performance of a company. Here we can see some sample stocks represented by a unique symbol. For example, AU Bank is a symbol of the stock of AU Small Financial Bank Limited. The second value with percentage symbol is the percentage of change in stock price from its previous day's close price. The third value is the LTP or last traded price. It is the reference price of one share of the stock. There are many fundamental parameters related to the pricing of a stock, but for beginners, these informations are enough. In simple, for example, if you want to buy one quantity of AU Bank stock, the cost is at present 1214.4. After buying at this price, if the stock price increases by 1%, you will get a profit of 12.14 rupees INR. Now, the advantages of trading in equities are: number 1, you can buy in any quantities as per your requirement. And number 2 advantage is you can buy in dips and add more quantities. There is a facility called as SIP or Systematic Investment Plan in Zerodha trading platform. The third advantage is you can wait till getting desired profit. And finally, no need to keep watching every moment. But the drawbacks are: comparatively reward is lesser, you need full capital to buy or hold, no margin leverages are provided. However, there is some margin leverage for intraday trading that we will discuss later. The second most profitable but risky instrument is stock futures and index futures. It is also called as the derivatives, which is a speculative price of an underlying or a stock. Here we can see some sample futures represented by a unique symbol with the month in which the contract expires. For example, Asian Paint is the underlying stock of its future contracts: Asian Paint October future, Asian Paint November future, and Asian Paint December future. And these futures expires in the last Thursday of respective months of October, November, and December. We can notice varying LTP in increasing orders. That means there is a positive speculation about the underlying. Similar to equity, we can buy and sell or sell and buy these future contracts. But we can buy only in lot sizes. For example, the last traded price of Asian Paint November future is 3099.2 and the lot size of this contract is 300. So you can buy or sell only in multiples of 300. To buy one lot, the margin requirement is only 1,78,543.36, which is very less than the capital required to buy 300 number of shares of the stock in equity. That is 300 multiplied by 3094.65, which will be equal to 9,28,395, which is the actual cost to buy in equity. When trading in futures, the brokers are providing margin leverages, which reduces the capital requirements. In future trading, for a change of 1% in the instrument price, the profit or loss will be approximately 30 multiplied by 300, that is equal to 9,000. The advantages of trading in futures are: with less capital, you can buy or sell more quantities through margin leverages, so you can get more return of investment. Multiple orders can be placed in different months contracts simultaneously. Similar to equity, we can do averaging by adding more lots in lower prices when buying. We can trade in stock futures as well as index futures such as Nifty futures, Bank Nifty futures. The drawbacks of trading in futures are: It is highly risky trade, similar to the probability of getting high return of investment. The percentage of loss is also high. The another drawback is the validity of the order is only till the expiry day. So we need to roll over, that is closing the current month contract and buy next month in different price. Similarly, you can choose options for trading. Options are conditional derivative contracts that allow buyers of the contracts, that is option holders, to buy or sell a security at a chosen price. For example, Bank Nifty is trading for 40,323.65 per share and a call with a strike price of 40,200, that is Bank Nifty November 40,200 CE, and the expiration is 1 month, is trading at 1,153.8. The option increases in value by 25, that is a lot size. For every rupee, the stock increases. The option expires worthless when the stock is at the strike price and below and the expiry. The advantages of trading in options are, with less capital you can buy or sell more quantities through margin leverages, so you can get more return on investment. Multiple orders can be placed in different month contracts with the different strike prices simultaneously. Similar to equity, we can do averaging by adding more lots in the same or different strike prices. We can trade in stock options as well as index options such as Nifty options, Bank Nifty options. Many trading strategies such as covered call, covered put, straddle, strangle are available for different market conditions with varying risk levels. You can check Zerodha Sensible for more details on trading in options. The drawbacks of trading in options are, it's a highly risky trade. Similar to high return on investment, the percentage of loss is also high. The validity of the order is only till the expiry day. So we need to roll over the positions, that is closing the current month contract and buying the next month in the same or different strike prices. Step 4. Selecting the stocks for trading. How to select stocks? There are many people working for you. You can check web portals related to trading such as Money Control, Economic Times, etc. Plenty of YouTube channels are available. They are giving stock recommendations and advices. But you have to stay away from fraudulent financial consulting services. We can select stocks of popular companies or brands. Also, we can select stocks with strong business opportunities. While trading in futures and options, we can choose index derivatives, which is less risky than stock derivatives. If you want to do stock selection on your own using technical analysis, we are helping at free of cost. Watch our videos on technical strategies, which will help you to find a proper entry point in stocks and index derivatives. We are not providing any kind of paid services, no WhatsApp group, no Telegram group. All contents are available at free of cost. Only thing you need to do is just click the subscribe button and bell icon to receive our periodic videos on advanced technical analysis. Here you will see one simple and basic technique for stock selection for investing in equity or cash market. Just add a Bollinger Band indicator to the candle chart. If the stock is currently trading near lower Bollinger Band in weekly chart and price is started reversing towards upward, then we can consider this stock for placing a buy order. Unlike in equity trading, for selecting stocks for trading in futures and options, we have to use different approach. We have to aim for a comparatively smaller range of price variation, so we can use lower time frame. Instead of weekly or daily charts, we can use hourly, 15 minutes or 5-minute chart. More importantly, we have to ensure that the stock is currently trading near a strong support or demand level. Watch our technical analysis videos for locating support, resistance and demand and supply zones. Next step is checking fundamentals. There are many people working for you. Check web portals related to trading such as Money Control, Economic Times, etc. Again, there are plenty of YouTube channels are giving stock recommendations and advices based on fundamental analysis. But we have to stay away from false interpretations. If you want to do stock analysis on your own, we are guiding you at free of cost. Also watch our videos on weekly stock selection, which will help you to find the proper entry point in stocks and index derivatives. For example, this is the fundamental checking facility available in Zerodha Kite application. We can check for some important parameters such as description of company, monthly yearly returns, dividend yield percentage, and other information such as important events and news on the stock. Also, using detailed info offered by Ticker Tap, we can check the income statement of the company. If the total revenue, net income, EPS are good, then we can select those stocks for buying. Shareholding pattern and mutual fund percentages are considered as strong fundamentals. The next step is verifying technical. There are plenty of learning resources are available in web. First you have to learn candlesticks, logics and interpretations. Then learn to use indicators and learn to draw support and resistance lines. We are experts in this area of technical analysis using indicators and price action. You can subscribe to our YouTube channels Swing Strategy and Swing Strategy Tamil for more details on technical strategies and analysis. We are also planning to bring detailed tutorial for each important indicators, which will provide unknown tricks and tips for advanced level of trading in futures and options. For example, we can take a buy entry in the stock using RSI indicator and simple moving averages. Step 7. Placing order. Learn to use your trading software or mobile application. For that you can refer the software manual. For example, Zerodha provides tutorial in the name of Zerodha Varsity. Also provides video demonstrations about placing different types of orders. Here I will give a small demonstration. Select the stocks to buy and click on the buy button. Here you have to choose the type of order, whether intraday or long term. The intraday orders are called as MIS orders. The long term orders are called as CNC or cash and carry orders. Then enter the quantity. Choose market or limit. If you choose market, then the price will be automatically decided based on current quote prices. However, it is advisable to buy and sell using limit price so that we can buy or sell at a desired price. Don't complicate with stop loss and stop loss market options now. Optionally, you can prefer to put a stop loss percentage and target percentage using GTT facility. Just for demonstration here, I specified my stop loss as 2% and target as 5%, and check the margin requirement before clicking the buy button. For placing orders in futures or options, choose the mode of buying, intraday or overnight. The intraday orders are called as MIS orders. The overnight orders are called as normal orders. The quantity will be in multiples of lot size. Here also you can choose to buy in market price or limit price. Always I would recommend the limit option. Here also you can put stop loss using that SLM facility, or you can use GTT stop loss target facility. Very importantly, we have to check the margin requirement before placing the order. This is the GTT order facility in Zerodha. If you don't put stop loss and target at the time of placing your buy or sell order, later you can do it by creating a GTT order. For that, click exit from position and select GTT. Enter a trigger price and order price at or after the trigger price for both stop loss and target. The last step is waiting and taking profit. This is more crucial than placing order. This process will test our emotions. The order will be with a decent profit and we'll tend to expect the stock to go higher. Sometimes the stock will trade in a range for a long period with a small loss. It will test our patience. Sometimes the loss will keep increasing and the stop loss will be hit in each repeat attempts. When we aim for a minimum profit, the risk is also less. When the market is not favoring our positions, it will be better to book the notional loss than trying to average. This is a live demo trade in UPL. Already we have selected the stock UPL, also done a quick technical and fundamental analysis on 25th October 2021. That is one day before the trading day of 26th October 2021. Now we open the UPL chart before market opens and set the time frame to 1 week. Here each candle shows the high, low, open and close price of that week. Now switch to the daily candle chart, and here we can see that the current last traded price is in line with the breakout position on 12th May 2021. This is called as demand zone. Now switch to the hourly chart and draw a support line in this small range. If the stock price moves above the current range, then we can take a buy entry above the current support. The current last traded price is 695 with a small correction of 30 paisa from the previous day close, and the market depth also looks good. So I will try a buy entry at 695, clicking on buy button, setting my desired quantity 5, choosing limit option with the limit price of 695. That means I don't want to buy at market price, I want to buy at 695 or below. Right now both market price and my limit price are same. The important things to verify before placing order are the order type and selection of intraday or long-term mode. Optionally, we can put stop loss and target orders using GTT also. But right now, I'm not using that. See the total margin requirement for this order. It requires 3,475 rupees to execute this order. Now my order gets executed at 694.9, which is better price than our limit price. I'm refreshing the chart. We can place an exit order from here, or we can do from positions tab. We are in the position tab. We can check the profit loss status. From the order tab, we can check the order details such as time, price and order type. Now I'll show you how to place stop loss and target order using GTT facility. In positions, click on these three dots, then click on create GTT option. By default, the transaction type will be sell. Now I want to close my order. If the stock goes down below 690, so the order should be triggered above 690. Here just for demonstration I am putting my stop above the trigger price as 691. We'll see what happens. And I'm aiming the target of 701. So my target order should be triggered before that level at 700. Now clicking on place and orders are placed. We go to the GTT panel to check the status. Here we can see the status. Now I switch to the 5-minute chart to see what is happening in lower time frame. Our target is around here and our stop loss is below the today's low. Just for demonstration, I place the target at a nearer level. Now we'll go to GTT panel and see target order got triggered. Also, the target order got executed at 701. So it is that simple. If you want, we can aim for higher target levels at 710, 715 and 720 because the stock is still moving higher. You can see the order summary here. In the same way, we can buy one lot of UPL November future at today's open price of 697.6. At the end of the day, the close price is 719.8. So the stock is raised more than 20 points. In futures, we will get 1300 for the increase of every 1 points. So easily we can get a daily profit of rupees 26,000. If you like the content of this video, please do subscribe to our YouTube channels Swing Strategy and Swing Strategy Tamil for more details on technical strategies and analysis. Please write your suggestions and queries in the comment section. Thanks for watching.